Hey guys, welcome back to CryptoBytes, your daily crypto news source. For today's episode, we will be unraveling more issues about cryptocurrency. We will be talking about bullish signal flashing for two of Ethereum's biggest rivals, says crypto insights firm. Polygon teams up with payments giant MasterCard to launch Web3 incubator for artists. Institutions eyeing XRP as investors increasingly betting on victory in SEC lawsuit. Cameron Winklevoss calls for the removal of DCG CEO Barry Silbert. Bitcoin price holds $17,000 into Fed Powell's speech as GBTC jumps to multi-month highs. Coinbase lays off 950 staff, cuts operational costs by 25%. If you want to know more about these, please continue watching this video so you will know how these would end. Also, like and subscribe to our channel so you will be updated in the latest news on crypto. So without further ado, let's dig into it. According to a renowned analytics firm, crypto trader sentiment toward Cardano and Binance Coin shows that both assets may be prepared for rallies. Sentiment observes that the crypto community is gloomy on both Ethereum rivals, whilst the crowd is positive on ETH and payments network XRP. Quote, with crypto market caps bouncing very much in independent directions, we're seeing notably euphoric crowd sentiment on XRP and ETH. Traders are less interested in BTC, BNB, and ADA. Historically, bearish sentiment projects perform better on average. End quote. At the time of writing, ADA was trading at $0.311. The eighth largest crypto asset by market capitalization has dropped more than 6% in the last 24 hours. At the time of writing, BNB is trading at $272.49. The fourth largest crypto asset by market cap has dropped more than 2% in the last day. According to Sentiment, the weekend cryptocurrency price increases went against public expectations, which is a frequent occurrence. Quote, as we have seen time and time again, markets move in the direction of the crowd's unlikeliest expectation, end quote. Sentiment also mentions that cryptocurrency trading volume has dropped to its lowest level in over 2 years. According to the analytics firm, quote, there are two ways of looking at crypto's 2.5-year low level of trading volume, less resistance and sell walls, leading to whales pumping prices easily. Utility is limited with less order book activity, which could cap long-term bull run potential, end quote. Polygon, Matic, a Layer 2 scaling solution, is cooperating with payment card giant MasterCard to establish a Web3 initiative for musicians. In a recent press release, MasterCard announces the creation of the MasterCard Artist Accelerator, a program aimed at providing music artists with the skills and social connections they need to survive on the Polygon blockchain. Quote, kicking off in spring 2023, the MasterCard Artist Accelerator will prepare 5 emerging artists such as musicians, DJs, producers with the tools, skills, and access to forge their own musical paths in the digital economy. The artists will gain exclusive access to special events, music releases, and more. A first-of-its-kind curriculum will teach the artists how to build and own their brand through Web3 experiences like minting NFTs, non-fungible tokens, representing themselves in virtual worlds, and establishing an engaged community, end quote. The program will also appeal to fans since it will include the MasterCard Music Pass, a unique NFT that functions as a virtual and physical backstage pass. Quote, designed as a space for creators to come together and grow their music communities. The MasterCard Artist Accelerator also invites fans to have a seat at the table. The MasterCard Music Pass, a limited edition NFT, will give holders access to the exclusive Web3 music education materials, unique resources through our collaborations, and priceless experiences in real life and the metaverse, end quote. According to Ryan Wyatt, CEO of Polygon Studios, the collaboration between Matic and MasterCard will increase public awareness of Web3. Quote, the MasterCard Artist Accelerator not only shows the power of brands embracing this new space, it provides tools that can educate consumers on how to participate. This is an important step forward in opening up the benefits of Web3 to more people, end quote. According to a renowned digital asset manager, institutional investors are hedging their bets against the US. The Securities and Exchange Commission has filed a complaint against Ripple Labs. CoinShares reports in its latest digital asset fund flows weekly report that institutional investments are coming into XRP despite overall withdrawals from digital assets. Quote, XRP bucked the trend with inflows totaling $3 million, representing 9% of total assets under management, end quote. According to the SEC, XRP was an unregistered security at the time of its inception and continues to be one to this day. According to CoinShares, investors appear to believe the SEC's arguments will ultimately fail in court. Quote, we believe the improving clarity on its legal case with the SEC being seen as increasingly favorable for XRP by the investment community, end quote. Overall, institutional investment in digital assets fell last week, extending a trend that began in late 2022. Quote, digital asset investment products saw outflows totaling $9.7 million, highlighting continued mild negative sentiment that has persisted for the last 3 weeks, end quote. Bitcoin, the most valuable digital asset by market capitalization, saw the lion's share of the withdrawals. Quote, Bitcoin saw minor outflows totaling $6.5 million for the third week in a row, implying sentiment at the beginning of 2023 remains negative, end quote. Ethereum investment products lost money for the 8th week in a row, with outflows totaling $3.1 million. Last week, withdrawals from multi-asset digital investment products, those that invest in more than one cryptocurrency, totaled $4.5 million. Institutional investment vehicles focused on cryptocurrencies Binance Coin and Litecoin, which had inflows of $0.2 million each. Cameron Winklevoss, co-founder of Gemini, has asked the board of directors of Digital Currency Group, DCG, to immediately dismiss CEO Barry Silbert. According to Winklevoss, the DCG CEO made false and deceptive assertions about the financial situation of Genesis, a cryptocurrency brokerage business. Cameron Winklevoss, speaking on behalf of 340,000 Gemini-earned lenders, revealed in an open letter on Tuesday, January 10, 2022, that Barry Silbert claimed to have taken the $1.2 billion loss sustained after Three Arrows Capital collapsed, which was incorrect, according to Winklevoss. According to the Gemini executive, DCG did not pump funds into Genesis to compensate for cash loss at 3AC, but instead, quote, entered into a 10-year promissory note with Genesis at a 1% interest rate due in 2023, end quote. Genesis lending arm Genesis Global Capital suspended withdrawals in November following the bankruptcy of FTX, as previously reported by Crypto Potato. Gemini was impacted by the lawsuit since Genesis Global Capital is a borrower in the former EARN program. While both Gemini and Genesis have been striving to find a solution for EARN consumers, it was later found that Genesis owes around $900 million to Gemini clients. Part of Cameron Winklevoss's letter stated, quote, he has proven himself unfit to run DCG and unwilling and unable to find a resolution with creditors that is both fair and reasonable. As a result, Gemini, acting on behalf of 340,000 EARN users, requests that the board remove Barry Silbert as CEO, effective immediately, and install a new CEO who will right the wrongs that occurred under Barry's watch, end quote. Bitcoin remained over $17,000 on January 10 as risk assets anticipated new policy indications from the United States Federal Reserve. BTC USD was stabilizing on Cointelegraph Markets Pro and TradingView after hitting $17,396 on Bitstamp the day before, its highest since December 16. The pair rose in tandem with gold early in the week before cooling somewhat as US market awaited potential Fed triggers. On the day, Fed Chair Jerome Powell was scheduled to appear at a central bank conference, with bulls looking for a more dovish tone in the aftermath of many months of dropping inflation. It took until January 12 to release the most recent consumer price index statistics for December 2022. Michael Van de Poppe, the founder and CEO of Trading Business 8, expressed caution against being too bullish on the short-term BTC price movement. In a tweet on January 9, he summed up the situation. Quote, Bitcoin rejecting at crucial area as Powell's speech is approaching yesterday, plus simply crucial resistance zone, end quote. Quote, probably sweep towards 17.1k before another bounce towards 17.5k for bearish divergence, or we long at 16.9k. Good volatility, lots of dips on altcoins too, end quote. George, a well-known social media user and full-time Bitcoin trader, was interested in a potential intraday range with $17,000 as support. Part of an update stated, quote, think we might be developing a new range between 17k and 17.6k over the next 2 days, end quote. Other than that, the US dollar showed no signs of respite as its strength continued to decline, perhaps helping cryptocurrencies. The 103 level served as support by the US dollar index for the second day in a row. The largest institutional Bitcoin investment vehicle was more noticeable than the small increase in BTC spot price. The Grayscale Bitcoin Trust, which started a significant comeback on January 6, saw its share price increase 17% over 3 days. By doing so, the GBTC discount to spot BTC's net asset value dropped to its narrowest level in some months. According to data from CoinGlass, the negative premium, which was formerly a premium, was 38.5% for the day, from record lows of 48.9% on December 13. The parent business of Grayscale Digital Currency Group faced criticism as investors made a determined attempt to get their money back. I know you're enjoying this video because you managed to reach this part. So for us to be more effective in making these kinds of videos, support us by clicking the like and subscribe button to help us reach more people who have interest in watching crypto news as well. Thank you so much. Now, let's proceed. As part of cost-cutting initiatives, Coinbase is laying off an additional 950 employees, which will result in a 25% decrease in operating costs. CEO Brian Armstrong made the announcement in a blog post on Tuesday morning. According to Armstrong, as part of its yearly planning process, Coinbase tests a number of revenue scenarios divided into bull, bear, and base cases. Quote, as we looked at our 2023 scenarios, it became obvious that cutting costs would improve our odds of succeeding in each one, end quote, according to Armstrong. Quote, "While it is always painful to part ways with our fellow colleagues, there was no way to reduce our expenses significantly enough without considering changes to headcount." End quote. The layoffs came around 9 months after Coinbase terminated 1,100 employees, or 18% of its workforce, in anticipation of a US recession, and even revoked a number of employment offers that had already been accepted. The most recent job layoffs at Coinbase result in an additional 20% workforce decrease. Affected employees had their internal system access withdrawn right once, and they would be updated throughout the day on their job status. Armstrong stated that US workers will get a minimum of 14 weeks of basic pay plus 2 additional weeks for each consecutive year worked, along with other perks. Employees with work permits would receive transition help from Coinbase, while those who were not US citizens would reportedly receive, quote, "comparable support in accordance with the employment rules of your country." End quote. Since the start of the bear market in April last year, firms involved in the cryptocurrency industry have admitted cutting off an estimated 27,000 employees, including Kraken, Silvergate, and Galaxy. This number also includes Meta's 11,000 layoffs in November. With an average of $1.9 billion in daily trading volume, Coinbase continues to be the largest US crypto exchange. However, those who are paying attention to Coinbase's income may not be too surprised by its recent firings. Trading fees traditionally make up more than 90% of such income, based on 2020 filings. Due to declining trade volumes in the previous year, the company reported Q3 2022 revenue of barely $576 million, which was a 2-year low. In Q4 2021, Coinbase made as much as $2.5 billion. At this period, the price of Bitcoin reached an all-time high of almost $69,000. The share price of Coinbase has decreased in response to declining revenues. Over the past year, the price of Coinbase shares has plummeted by about 85%, reducing its market worth from $60 billion to $10 billion. Along with the employee reductions, Coinbase announced it will be terminating, quote, "many initiatives where we have a lesser likelihood of success," end quote, with further information to be revealed later today via SEC filings. So, how was it? Do you think that Coinbase did a good job in laying off 25% of their workforce? If so, write your answers in the comment section below so we will know your thoughts and opinions about this one. Use the hashtag BTC Coinbase in your answers. Thank you so much for watching. Until next time, only here on CryptoBytes, your daily crypto news source.